What is going on, everybody, and welcome to another weekly analysis. What we'd like to do in this video is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide a technical analysis on Sundays and a daily pulse on the market on X at Hemi137. So you can check me out there as well. But before we get started, remember to go ahead and smash that like button. And let's roll straight in and recap the past week. We are getting a lot of information, which is leading me to think that there's a lot more going on, obviously, underneath the covers, and a lot quicker than I even anticipated when we are starting to talk about inflation in itself. Now, this is something you need to consider. I've talked about how things have built up to this point and that we needed to start cutting rates. The Fed is reactionary, so you do need to keep that in mind. They said they aren't cutting at all this year or adjusting rates because they are waiting to see what the tariffs and everything else bring. That could potentially influence inflation and other aspects of the market. But you have to understand there was a massive debt bomb when this whole thing was transitioned over to the current administration. The current administration was aware of that, and so they made adjustments according to plan. Now, one thing is for certain is Trump is essentially asked Powell that he needs to start cutting rates again because the Fed are very reactionary. They wait until things are already way past go before they actually make any kind of adjustments to the rates. And at that point, things are already, again, very much in trouble. And that's why they do emergency rate cuts to start allowing things to shift. And what we've seen over this past earnings is we're getting more and more and more layoffs. And it is harder and harder to find work. And then we're also finding out in the revisions that there is a lot of ghost jobs over the past year and a half. There's a lot of jobs that just do not exist. All that being said, there's still a lot of other hidden things that just weren't being reported, like delinquencies. But that was coming into this administration. Now, what you're seeing is the current administration has had to take some massive action. Again, I don't believe in all the actions that he does. There may be a reasoning for it, but we obviously don't know why. And we can get irrational and debate things, but ultimately, what we need to do is focus on what's actually going on, the actions that are taking place. What we've had noticed is that we're having massive deportation on illegal immigrants. You have to understand, we've been feeding $185 billion to illegal immigrants, which could also be the reason why inflation has been running up so high, even though you are working 2 to 3 jobs just to keep a roof over your head and to keep food in your mouth. Being said, now we're cutting fraud and waste. So now there has been massive cuts to the government. And this is something we talked about, is we don't need so much regulation that you can't even open a new business. We're essentially monopolizing a lot of big businesses because there's so many rules in place, and then you're getting these extensions of the government that aren't actually the government, but they're being funded by the government. And so all this fraud and waste needed to be cut back. It was something that is much needed for years, for a very long time. To understand, Bill Clinton has also done this during his time and fired, I think it was like 450,000 employees or something like that, some absurd number back then as well. We need a reset. We need things to be cleaned out because we are spending way too much. And if we even want a chance to fix things, what we're going to need to do is cut tons of the spending. And yes, you have to rip the Band-Aid off. And yes, it's going to be painful initially. But with that being said, what exactly does that do to our current economic environment? What you can see, since we've been artificially pumping this environment hardcore going into the election, is you're going to see massive disinflation. Like, it's going to come out of nowhere because now you've cut off all essentially the flooding that's been coming in and essentially supporting this current economic environment. Once that faucet gets shut off, then you have no more fueling in that. So now you see massive deflation, and now we're starting to see numbers reflect that. So before we get too much into that, we need to go over NVIDIA earnings. NVIDIA earnings was one of the things that we've talked about. Apple holds 6% of the index, and so does NVIDIA. Those are the two biggest weights in the index. Now they're spaced out. Now you have Apple reporting first part of the month when the earnings start kicking off, and then you have NVIDIA kind of be the anchor that holds the back half of that. So again, the market kind of, and what we've seen is kind of just fluctuated back and forth in a pretty semi-big range until NVIDIA reported this week. Now they did report, they did do well, but nonetheless, that's not enough for the market to stay afloat. The market has been hemorrhaging. All these businesses have been doing very, very poorly, and somehow have to continue to cut because, again, they are in survival mode at this point because rates are just too high because price gouging is still continuing. They can't go out and purchase loans because banks don't want to give them loans in this environment. Again, the interest rates are way too high. Prices are just way too high. It's ultimately right now we can deal with high interest rates, but the prices of things are still just way too high, and that causes huge, huge problems. So what happened? The market's been correcting heavily since essentially NVIDIA reported. And so, like I've stated, that was the linchpin that's going to start moving this whole thing in a direction. Now, being said, March has tons of major events starting on Friday. We have non-farm payroll. And what did I just say about the massive cutting that we are seeing in the market from the government, which is a huge part of our GDP. But the House has also voted to pass a budget resolution. So that is coming through and going to look to get approved. Hopefully, if it gets approved, then the debt ceiling problem won't be a problem here coming into March, which is one of the aspects that we're looking at. But also, we have single family residence loan delinquency rates is now higher than that of 2008. Again, this is something else that's been filtered from mainstream media over the past year and a half, 2 years. You have to understand these problems we were having since SVB went down, which was almost 2 years. It was about 2 years ago now. We were still very much in the middle of a banking crisis. We can't continue to spend because it is putting too much stress on the system, and you're going to cause the whole system to break. And that's what you're seeing. And that's why you have to see massive action from the current administration to start cutting that spending, because it is essentially ruining our environment or our economy in general. And so, that also being said, U.S. Debt defaults soar to $46 billion, the most since the aftermath of the global financial crisis. With all this being said, all this stuff going on, the Atlanta Fed GDP tracker for Q1 is down to negative 1.447%. So now we've gone negative, which has happened in the past, but it kind of happened abruptly because of the fact we've had to trim you. Essentially, Trump didn't have any choice but to cut stuff quickly and rapidly because, again, we are burning way too much cash. At one point over the past year and a half, we were burning $1 trillion every 90 days. You need to take a look at the perspective of that, what $1 trillion actually is. You could spend wildly throughout your entire lifetime and never have to worry about going broke. But being said, now that adjustments have been made, it's obviously going to take a huge whack out of GDP, which we're seeing. And now Trueflation is saying we're down to 1.51%. So now inflation has been slashed in half because of the massive cuts. And this is something we've seen with Javier Milei. Now, I don't know what exactly has gone on with the whole crypto scene and what he put out there. I am against any kind of fraud or corruption. I mean, even the current administration has done their thing as well with crypto. I don't know what's going on there. My guess is maybe they're trying to debunk banks. I have no idea. But nonetheless, what we saw with Javier Milei, the point I'm trying to get to, is that he did the same thing. And what happened was inflation went from, I think, 19% down to a normal, more sustainable inflation rate, which I believe is down to like 4 or 6 or somewhere around there now. So it's still way better. He's chopped it way down from essentially eliminating wasteful spending in the government. And now Trueflation is reflecting that. And so the Doge clock, I didn't have that written down, but the Doge clock is well over 100 billion at this point. They're looking to try to hit $1 trillion by the end of the year. We'll see if that occurs. And also, there's supposed to be that Doge dividend. I don't know if that's going to be a good idea or not. The money's already been printed. So will it cause inflation? It can't in some aspects, but again, people are so far in the hole right now. A lot of that would probably go to debts and everything else, as we're seeing. People are credit card defaults and their home loans are defaulting. So that would at least try to help pay some of those bills. I don't think it would go straight out into just spending wildly on other things. Not to say that it won't, because I think there will be a massive majority of that, but I don't know how it will still have an effect on the market. So Bassinet also came out. So the new Treasury Secretary Treasury just came out and said America's private sector is in a recession. Again, he also stated that we've been in this recession perhaps for quite a while. And this is something we've been talking about. If you've been in recession since 2022, tech bottom at that point, because that's when inflation was at the highest at over 9%. And understand that because of that, we've had a lot of quote unquote rolling recessions. Things are just starting to now kind of recover aside from the Mag 7. Obviously, the Mag 7, I think, was expedited because of the whole race for AI, I think is very much true. And even much like the moon landing and everything else, I think there was a lot of manipulation that occurs there because, again, you're dealing with potentially a global conflict, and to rise above all these other countries, you have to show strength, whether that's true or not. It's a military tactic that happens. So maybe that's what we're doing, but nonetheless, we needed it to get us. We need to be funding that because that's the next step. We can't fall behind in AI. We can't fall behind in robotics. Those are things that we just can't do, or we drop out of being a global superpower very quickly. So with that being said, again, things are being pushed. I think even to this point have been pushed to a level that they have never been pushed before. And luckily, we were able to make some changes, and now stuff is starting to be cut. A lot of the waste and laws are being implemented to try to control what's currently going on. But again, we will have to see how much it actually affects. But what we do know is if this true inflation is down to 1.7 or 1.51, excuse me, and the GDP is way down in the negative, and people can't get work, and there's more layoffs, that means what's going to happen is your next unemployment, whether it's this Friday or the next one, I'm pretty sure it will start being reflected on this Friday, and it's going to jump way above expectations, and it's going to scare the market, in my opinion. And at that point, which is going to happen, is the Fed are going to have to start panic cutting rates because inflation, which has been defeated because the massive waste of spending isn't there anymore all of a sudden. So now you get this massive wave of deflation. Is that going to be reflected? Maybe not as quickly, but with that being said, that's going to essentially cause the market to panic and realize you've been in a recession and things will come crashing down. But the good thing is that it is much needed because the Band-Aid needed to be ripped off. And as painful as that is, and maybe people don't like it, it's something that had to be done. These kinds of big actions had to be done because the system is completely broken and we are wasteful spending for absolutely no reason. There's no reason you should be paying, essentially paying the first 3 months of the year. Your whole salary for the first 3 months of the year should not be going to taxes. Period. Why are we spending all this wasteful spending on stuff we don't need, and the overextension of the government? We don't need those kinds of protections. And a lot of it's wasteful. And again, it's a political game, and they try to take control of things they just don't need control of. So being said, you're seeing the cuts of that. And this is what we get is massive disinflation and a huge spike in unemployment, which again is going to force the hand. So you have to be ready to be buying on this dip. And in anticipation, the printer will come on. When the printer comes on, the market goes back up. Maybe it's not great for the economy. I get it. It's a broken debt-based system. I totally get all that. But when the printers come on, the markets start to run. But you're going to have your manufactured event. You're going to have massive unemployment numbers coming in, freaking the market out, forcing the Fed to have to cut. Because originally Trump had asked Fed Chair Powell, you need to start cutting rates. He's like, they have no control over us. We're independent. Okay, fine. I'll just do massive cutting so you get a huge spike in unemployment because it is wasteful spending. And then, whether you like it or not, you're going to get a huge spike in unemployment and you'll be forced to have to cut. And then that will be it. And then the printers will have to come on, and then things will be corrected at that point. That's what we need. Again, but to get to where we need to be, a healthy economy, there's going to be a lot of pain because there has to be a lot of adjustments and new things put in place, new policies put in place. So that's what we're currently seeing. That's what I think is really going to be playing out. I think Friday could be massive in a lot of different aspects. I don't have essentially the numbers for the week as far as expected moves, but I would assume that they are pricing in the end of the world again this week because of those numbers and what has been happening with Doge and everything else, with a massive cutting of wasteful spending. I think is a lot of stuff's been put on freeze too, so they can be evaluated. So you're going to see a huge change and a lot of panic coming from those numbers. So that weight on unemployment is going to weigh heavier than it ever has before, potentially, because this could be a huge pivot point that could scare the market. And then they'll say it's a recession. The market will price all that in, and then we can turn the money printers on and we'll essentially recover from that point. But again, you need to, rip the Band-Aid off. And this is that process of doing that. So, being said, upcoming week, again, Friday is the big day. We have non-farms at 8:30 Eastern Standard Time, and then you have Fed Chair Powell at noon. There is some Fed barking, and there's a couple other Fed members talking throughout the week. We do have FOMC meeting notes on Wednesday. None of those things really matter at this point. We're trying to go for the things that have the most weight right now, and that's going to be our big linchpin on all of this that we've been talking about for, about a year and a half now, and waiting for this thing to unfold. Again, this is why I like to do more micro as opposed to macro, because macro takes a long time to play out. It's good to be aware of it. It gives more talking points on what's unwinding. But again, ultimately, you're going to have to understand it's always tied or associated with a event. And on that event will be the pivot point in which things will be priced in, in which things will change. And I think we're at that point to where we're seeing these changes in massive unemployment numbers and massive GDP losses. That's going to force the Fed to have to change, and then things potentially reset. There's already getting tons of supply of automobiles, already getting tons of supply of houses that are starting to put everything back into the buyer's hands, and prices are going to have to come down and screaming down because a lot of them are essentially institutions that have been buying up houses or single family homes and jacking up the prices. And when they realize that nobody's going to be buying, no one can purchase at those numbers, that switch is going to flip. And then you're going to see massive changes. And you're already seeing that in Texas and Florida are two primary states. And again, this crash isn't going to happen everywhere when it comes to housing, but when it does happen, it happens that changes the sum of all things to reflect that, yes, you are in a financial crisis and the housing market will crash from that point. Again, people can't afford it. It is too unaffordable. So with that, monetary policy is March 19th. So we still got some while. That will have a summary of economics. So that will have more weight on it as well. Again, funny how everything is playing out. We're coming into March 19th with a lot of things going on. We do have core inflation, which will be important to what is going to happen during the monetary policy, because now we get this massive disinflation that we're seeing, because it is being reflected in orange juice and it is being reflected in coffee, which were two of the big things, which potentially, if we were feeling a bunch of money into illegal immigration into this country and housing them and everything else, what if that, because we cut that spending and all of a sudden we cut that spending and and inflation for those items falls down through the floor, right? So it's just my assumption that's what it is, but it very well could hold truth. And now we're starting to see this inflation was massively due because this wild spending that we were doing. We've been told about this multiple times. The reason why inflation is so high because the government is massively spending trillion dollars every 90 days. That is ultimately what your culprit is. Upcoming earnings, we're going to go ahead and pull this up. I don't, because of a lot of the numbers I don't currently have, I tried to get the expected moves this week, but again, my program wasn't opening. They're doing some update right now. And again, some of the other numbers I didn't have reflected in it. Look at the Doge clock numbers, but nonetheless, it's still over 100 billion at this point. So you're seeing the massive different disinflation already occurring that I figured I would pull this up for this week. Again, there's some really good earnings, but I kind of just want to, really look at these are why I really stopped showing these throughout the remainder of the earnings. There's still always great earnings on there. There's still always great companies, but again, they're not going to have as much weight as a lot of these other ones are. But Target will be a good one this week because we just had Walmart. Walmart dove last week, and now we have Target this week. Expect that if Walmart's already hurting, that one could definitely take a huge hit. So can Best Buy. AutoZone may be doing better. When inflation starts to go away, that's going to be one of your pivot points. AutoZone will start to go way down as opposed to the run up it's been having because people are willing to pay for the parts and trying to install them themselves as opposed to pay for a mechanic because they're too overpriced at this point. You have CrowdStrike, which is going to be extremely important for security. I think they will continue to do well just moving forward. But if the market sells off, they'll definitely go with them as well. You also have Ross. That would be interesting to watch there. They should be doing well in a bad economic environment. Abercrombie and Finch has been getting a lot of popularity lately. You may want to watch their earnings. They flew up on the last earnings, I believe, or the one before that. So that one would be interesting to watch there. And then not really Zscaler would be a good one to watch. MongoDB for AI plays there. And then you have a lot of banks that are kind of mixed in the thing that you got to kind of pay attention to too. You have GitLab too on Monday night. That one would be a good one to watch. And then Thursday, JD.com. That's a good China play there. It's typically does very well with AI as well there too. BJ's will be interesting to watch this week as well. And then you also in Macy's again. A lot of these companies are going to kind of pulse on the market and what's going on. Broadcom is going to do very good for AI infrastructure, although some of that the whole sector has been hit pretty heavy, especially the cloud space. So it'll be interesting to watch to see how well they do. And you have Costco as well, Hewlett Packard, be some big ones to watch, but that is pretty much what I got for this week. Again, there's a lot going on. We want to just be mindful of what could potentially be playing out. So we got to let it play out first and then kind of take it from there and then see what we get. So with all that being said, remember, drop a like, drop a comment, what you're looking at for the week, what you're excited about for the week. Are you ready for the massive disinflation, or is there something you're thinking that some other potential scenario that could be playing out as well? I'd like to hear your thoughts in the comments down below. But with that being said, thank you for your time, and I'll see you on the next one.